Good morning, good morning, good morning, everybody. Welcome to Monday, April Fool's Day, Monday, April 1, and it is just after 5 a.m., 5 p.m. over here, 90 degrees. And yeah, spring is here, summer is here, spring for you, summer for us. And today is a very quiet day on headlines. We have ISM manufacturing at 10 o'clock, construction spending, at 11:30 we have the 6-month and the 3-month bill, and that is it. There are no other headlines, and I will tell you now, having been awake since futures opened, when I sent out that email last night at around 5 o'clock a.m. your time, or sorry, p.m. your time. I've been watching futures for the better part of the entire day. Took a tiny little hour and a half nap. There was no catalyst whatsoever to have spiked us up with the gap. And there still is no catalyst whatsoever to have continued to support us up here. So as of right now, we are currently up 19.75 points on the ES, which almost all of came a little bit earlier than that, right around when futures opened up. The NASDAQ is up 100 points. And the Russell 2000 is right at that major 2163.70. So again, tick strike. You're on your computer, you're on your laptop, and you are trading. You want to have this on. Click on your speaker, listen to the market, and take a very chilled, relaxed approach. Gonna bring you through real quick where we are. And reminder: today is day 18 since we have had a minus 1% session on the SPX. We covered this a little bit last week, as we had 17 back in January. We have had 17, 18 prior. We had one stretch where it was around 24, 25. So we're very, very, very on the edge of a sudden minus 1% day. So you want to keep that in mind, and you want to keep in mind where your minus 1% is, which is minus 1% from the previous day's close. Today, it happens to be at 5201.81. So go on to the SPX, and again, here we are into this very, very old, hey guys, keep your eyes open. You've just had 3 green weeks in a row. You can go back year after year after year and see how 3 green weeks in a row is a major warning sign that you are due to get yourself a red week. It's been a little bit different for obvious reasons, as you know, since October 27th. And I don't have the number on the top of my head right now. But again, we had a minus 1% week at the start of March, minus 7 points. We had a a red week, not a minus 1% week. A red week there in the beginning of March, minus 7 points. A red week there in the OPEX week of February, minus 21 points. And a red week there in the very, very beginning of January, minus 48 points. And every single week since October 22nd has been green. 22 weeks, we have had 3 red weeks. I've shared that chart with you before. In fact, I'd have to go look at it. It's in the email from Friday. But we are in 1967. We are in 1968. So be very, very close to that. And on the spreads, where I'm going to go to now, I don't have a safe edge, only because, yes, I can calculate the safe edge, but because we have been trading for the better part of 6 days since we've been in these 5200s, 20 points, 16 points, 13 points, we had 2 sessions of 30 points, Thursday or Wednesday and Tuesday last week. And we had 19 points there on Thursday. Not only that, over on the QQQ, we only traded a 2-point range on Thursday. Nothing is screaming fantastic on any of this. So the automatic trade is that we're not going higher. And we have that gap up over the weekend. So as of now, for a red close, with the SPX having closed at 52.54 and having had 2 green closes in a row, not that that's what we're counting this on, but because of where we're at, 52.60, 52.55, Zero DTE spread over on the SPX is now getting better than 350, and there are $4 fills. $4 with $1 risk, potentially a 400% trade, just like we had last week on Tuesday. Come on to a little bit more simplicity. You could opt to take the exact same trade going out to Wednesday, April 3. You could do it on Tuesday. The 5260, 5255s, they're still getting a minimum of $3 credit. It's 150%, $2 risk, $3 credit. Now you could go out and take the safe straddle, and safe, I'm talking about 5300s, without having a safe calculation, but going, okay, come on, man, we're in the 5200s. We haven't hit the 5100s yet. We now have three gaps, in this 5200 range that are unfilled. You could opt over there to take the April 1, 5305, 5300 calls. They were getting 50 earlier last night. Now they're getting a little bit less, only because, things have slowed down, and we are down about 5 points from where we were when that went out. Or you could go out to Wednesday, April 3. You could go out to Tuesday. You could go out to Friday. You could go out to Thursday. The 5305, 5300s going out to Wednesday, they're getting a little bit better than $1 at the moment. So again, that's what we're looking at on that. So take you over really quick to the charts, and here are the charts on the SPX. And again, looking at a 10-day view. The 10-day view, the big CPI, blue, whatever. Here was our one gap right here. Sorry, wait, I got this wrong. Let me zoom in here into the 5-day. So we have our gap down here at 5313. Okay, we've got that gap. There is a fractional. I was wrong. We're not 3 gaps. We have 2 gaps. We have that gap there at 5213, 5203, and we now have this new gap, which is the close of Friday, 5254.35. And wherever it is that we open up today, which being that we are up 15 points, let's just go ahead and assume that this is going to be around 5270. This would have been on March 22, and I like it to be nice and tight, so change it to 4 o'clock. So yeah, you've got your 2 gaps there. You've got your 5-day moving average, which will be moving up, which will be right around 5230, 5240 later on today when it opens up. So that's the area around there that you're looking at. Come over onto the wider view of the SPX, and again, looking at this for what it is, we have had this running sell divergence on the daily since the beginning of the year, but it doesn't matter. It doesn't matter, because until price action makes an actual move, there's nothing to make a move off of. Coming onto the 4-hour, 4-hour got overbought over here back on March 20th. And again, even with where we're at, fractionally higher highs, we are not seeing any kind of negative implications on it. Come over onto the 1-hour, and the 1-hour having closed down here around the 60s, tiny little gap up that we have here this morning. We will be opening up somewhere around on the 80 on the 1-hour RSI mark to again show that it doesn't matter until price decides that it's time, and it takes advantage of that and starts to make its move. On to gold. Pointing out gold only because not only is it on new all-time highs, but it is hitting here a major Fibonacci level. This here coming from 2008, 2011, and 2015. So let's go back and look at where this drawing comes from. And that's where it comes from right there. Coming off of the 2009 lows to the all-time highs in 2011, down to the all-time, or not the all-time lows, but the big drop there in 2015. And here you are right at the 100 extension. And you could look at this in a number of different ways as much as you want to. In fact, I don't have it up there, but let's go ahead and do that. Just for shits and giggles, and post our trend line there on where that was going to. And yeah, you've kind of just had a little bit of a bust out here. So gold, I don't know that many of you that trade it, but I would be very cautious about gold on getting long. I would be expecting gold to be retracing back to around this 2152. So be careful on that. IWM, here we are on the IWM looking at this from a wider view of 10 days. And man, things were looking really nice there. They were looking really nice there back on March 19th as we were getting ready to go red again for the year, down below 199.44. And then all of a sudden, he had that blah blah that came out with the FOMC meeting and all of this, and here we are cruising above, untouched to that 203.69, which is now the untested support level. We now have three gaps that are unfilled, three gaps being over here with 210, the one from the weekend, and 207.21, which had been resistance for a long period of time, is now your first support level test, 207.21. So I think that leaves me off with this, and I will move over on to my other ones. Here is the VIX, and as always, the VIX gaps up every single Monday. Every single Monday, the VIX gaps up. And yes, I've looked at this for weeks and months about taking calls on the Friday for the weekend gap up, and they're not stupid. They price it in. But here we are with the VIX, where we can't hold 1339 for support, which had been our support for a long period of time after having broken down below it into December with the super lows. The VIX is going to have to get up above that 1339 and back into the 14s for us to have anything to look forward to. And until it does, it's going to continue to be the same kind of grind that we've been in for the last 2 weeks. Come over onto the QQQ, which is now the weaker link. QQQ, little gap up here, 444 being the gap to be filled. And this is your 5-day chart, looking back at last week where you had absolutely nothing. And we still have this fake print down here at 441, which has been untouched. Come out onto a wider view of it. And you can see here again, after having that major move that came off of that NVIDIA, we've been trolling around in the zone, and the break is still not 441, but 433.50. And it may be another few weeks with earnings coming up here at the end of this month before we start to get that move down there, unless there is another catalyst that comes from somewhere else. So here we are with JP Morgan. And again, JP Morgan, it looked fantastic. It looked very good. Was waiting for that 193.70, got that 193.70. Everything looked fantastic with it. And then all of a sudden, the very next day, we gapped up and broke up through there. That drop that we were having last week going into Monday, that's all that we needed to see. All I needed to see was that break below 193, and I knew without a doubt we'd be heading down to 186.41. Instead, everybody rushed into the banks on Tuesday, and here we are opening up at a new all-time high with the gap down to 200, and coming out here from a weekly point of view. All right. This is insane. We're talking 10 in a row earnings. 11 green weeks in a row on JP Morgan. 193.71 is now the bottom. Until that 193.71 even gets touched, 193.71 is the current bottom on JP Morgan. Federal Express. Now, Federal Express, I like it. I like it because Federal Express is full of crap. All right. You had this major move coming off of your earnings, and everybody gets deliveries from Federal Express. Everybody can talk to Federal Express delivery drivers. They can talk to pilots. Things aren't good at Federal Express. There's a major gap over here, 277 to 262, coming down here to earnings to fill the earnings gap. That is the major bread and butter that I'm talking about for me. Come out to a wider point of view, and like I shared there on that major chart, you look at this 267 going all the way back to January of 2022. That's where I'm focused on, is at 267. Federal Express is really cheap, very low volume, so it's one of those plays that you play for, the ability to play it. But this is not one of those major fantastic ones. You'd have to go out a couple of months into July, into August, into September to be looking and concentrating on that 236.67 down below. So again, there you go. You got your VIX. not doing anything. We're gapped up overnight. Pull you up here on the ES, and here's your ES overnight. Here's your gap that is unfilled over on the ES from the gap up overnight. So we are playing with fire as we go into the start of April. So there you go. You've got a clean view of what's going on with your ES with 53.13 priority level over there, down 14 points from where we're at. And I will leave you off with the Nikkei. The Nikkei having collapsed last night. Nikkei is now only down 0.78%, having been down a little bit greater than 1% overnight. But there again, on the Nikkei, just come up to new all-time highs, 40,000 having been hit. Finally broke out of that 1982 or 85 all-time high at 38,957. So yeah, things are a little bit inflated as they go around. So there you go. That's your start of the week. Again, spread-wise, excuse me, you go with April 1, take some risk, very likely get paid on it very nicely. You can move out to April 3. Again, take some risk, very likely get paid very nicely on it. Over here on the safer side, 5305, 5300, it's a little bit of common sense together with a little bit of, come on, man, this just simply can't be real. With your 18 days since you've had a minus 1% day on the SPX, or you could go out to Wednesday, 5305, 5300s. You're getting a little bit better than a dollar. You don't have to worry about sitting there monitoring it. But again, we have been having really good success by taking these risks. And with the close being 52, 54, 35, having now reached into higher levels overnight for absolutely no reason at all, it's going to be another one of those interesting, oh my God, look at how amazing this is, where we don't even break 30 points. So enjoy yourselves. Have a great start to the week. Have an amazing Monday. And again, 3 green weeks in a row. There is a very good opportunity to take a look and possibly place a little bit of risk out there for us getting a red weekly candle based on where we open up on Monday morning. So I will catch you guys in the chat room. I am going to go and water my tomatoes and watch the sunset behind the palm trees and the giant bamboo.